What's going on, everyone? I hope you're having a great day. My name is Gev. It's Thursday, May 28th, so let's talk capital. All right, guys, so I have a very interesting chart set up for you guys today. I'm going to show you a couple tips and tricks on how you can get a better gauge on the S&P 500. And we're going to go over all these stocks that we went over, all 10, 15 of them. We're going to do a quick recap so we're ready for Friday's close tomorrow. And I'm going to tell you guys what I see in the markets. So to start real quick with S&P 500, nothing really has changed from yesterday. We're still above the 200-day moving average. The daily candle just closed, and we closed a spinning top doji candle. Kind of just means indecision, which is to be expected. We did get above the 200 moving average, so now it's kind of like, do we belong here? So I believe we'll see a daily retest tomorrow. And what happens from there is going to be it's going to be interesting to watch. We do get the weekly close tomorrow. On top of everything, we got unemployment claims coming out today. So we were expecting 2.1 million. We got 2.123. So basically, we got about 230,000 more than expected, which again beat expectations. Market did jump. If we move down to the 4 hour, you guys see since 7 a.m. we've rallied pretty hard and close like that. We should get a pullback to about 3,000. Honestly, 3,000 sounds right about even. Get a pullback to 3,000 and see what happens from there. Looks like we're opening back up again. But real quick, let's move over to my little chart that I found out. So I figured out that if you type in the ticker for a company plus a ticker for another company plus, like we did right here, right? So we did Facebook, Amazon, Apple, Google, and I'm gonna change this. I'm gonna show you guys FANG plus Microsoft first, and then we'll come back to this chart. So we put that, so we put a plus. What's Netflix? It's NFLX. Okay, so this is FANG, which FANG stands for Facebook, Amazon, Apple, Netflix, Google, plus we added in Microsoft. Okay, this group right here carries about 20 to 25% of the weight for the S&P 500. So it's very interesting to look at this, and I want you guys to see this for one simple reason. Okay, this is a completely naked chart, as you guys can see. No moving averages, basically just that small one. Let's clear that out of there too. Right here is September 2018, right? This is the crash of 2018, okay? And this is the rally from there. And this is right before the virus hit, right? This is the bottom of the virus. This is where we stand today. Okay, to me, there's nothing bearish about this chart, right? So we have support here, and we have resistance here. This is not bearish. Okay, this carries 50%. I'm sorry, excuse me, getting ahead of myself. This carries about 20 to 25% of the weight for the S&P 500. Okay, these are the highest weighted. I was about to say coins. These are the highest weighted stocks. Okay, and they're outperforming everything. Okay, they're basically pulling the S&P 500 along with it on the ride to 3,400 possibly, right? As you guys can see, if the S&P 500 was just comprised of 1, 2, 3, 4, 5, 6 of these companies, we would currently be trading at 49.56, not 3,040 or whatever we were at, right? What does that mean? That means these companies are not gonna probably are not gonna let us go into a recession. Just to be completely understandable, because these are the companies that even as this unemployment scare and lack of value scare and lack of production scared, everything that the coronavirus has pretty much done is scared us into thinking that we're going to go into a recession, right? I mean, these stocks have just not given a damn about it. They've crashed with their, let's see what percentage crash. So it was even a less percentage of a crash than we had on the S&P 500, which is actually hilarious. So it crashed 27% and since then has rallied 47%. I mean, that's just incredible, right? This was a buying opportunity of a lifetime, some may say. Um, Basically, what this means that with this high concentration in stocks like this, realistically, we cannot get bearish on the S&P 500 until we get bearish on this, right? Now, the original one that I showed you, this one takes out, let's go back a little bit. There we go. So this one takes out Netflix and puts in a couple more of the legacy companies like J&J, Berkshire Hathaway, and Walmart. And what's PG? Procter and Gamble, right? So it takes all those out and puts a couple more of the legacy. I mean, takes on Netflix and puts in a couple more of the legacy companies. And I'm gonna go ahead and add in Netflix with us, and we're just gonna look at this real quick because it doesn't make sense not to have it in. Ooh, that one hits the limit, huh? Okay, well, let's just go ahead and look at it like this. So if we look at this, now we're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of the biggest companies on the S&P 500, right? Again, we can see that we're not really bearish. I don't know why these indicators are popping up here. Give me 1 second. Okay, again, we're not super bearish. Now, we do have a possible double top in play, but again, since we're above this gap right here, I'm not going to be bearish on this because remember, guys, a gap to the downside is bearish until a close above. Okay, so now we've had 1, 2, 3, 4 closes above the gap. I mean, at this point, this gap is support, right? So if this thing pulls back down to 61.31, you should probably get in, right? Get in on the individual stocks. This is not an index you can buy, so you can't really get in on this index. This is just an index to show you how the top companies are performing. Remember, you can go in there and type in the ticker plus another ticker, and you can do that for just about any of them. And I guess the cap is 10. Okay, so we're looking at 10 of these companies in the S&P 500, right? It's 10 of the 500, and we're probably looking about 30, I would say 30 to 35% of the weighted S&P right here. Okay, so this is 35% of the weight of the S&P right here, and this is doing fantastically. Again, there is no reason to believe that the S&P 500 will top here, right? So if we take this and do that, and we take this and we do that, we can see we're in a clear, defined uptrend, right? Way more defined than the S&P 500. Now remember, on the other one, it was 27%. Over here, 27% again, and we've rallied 40%. Okay, so again, upside is larger than downside. And it's obvious that Wall Street is completely disconnected from Main Street, right? We keep getting unemployment claims, stock market keeps going up. Anything negative sends the stock market up, and the reason for this is because the net worth of the top 1%, which is in these companies, is heavily protected, guys. When the Federal Reserve comes out and gives us all this bailout money, when the Fed comes out and gives us all of the stimulation, they're not giving it to us. This is the first time in history we've, as citizens of the United States, gotten a check, right? With that stimulus check. This is the first time this has ever happened. And that $1,200 is bullshit. $1,200 is nothing, right? When these companies are getting billions of dollars and we're getting $1,200 one-time payment, complete bullshit. So the Fed has their back. Majority of their investments are in the stock market, okay? And the bigger thing is when you have negative rates, when you have zero growth in other sectors, and you have 2% inflation, meaning 2% of your cash every year is disappearing. It literally makes no sense but to be in the stock market at this point. So you're really in three assets, and that's stocks, gold, and Bitcoin. And all of those charts are displaying that. All of them are showing that yes, we crashed. Yes, we bounced back harder. Right? With the S&P 500 being the slowest of the bounces, if we come back here, this was the crash, this was the bounce, right? If I bring you to gold, this was the crash, this was the bounce, right? If I bring you to Bitcoin, this was the crash, this was the bounce. Gold and Bitcoin are trading above the crash price right now. Just absolutely remarkable, right? S&P 500, if anything, is the lagging indicator here. It's falling behind the other ones. But I'm becoming more and more certain that we will have a catch-up phase. We need to get above 3,100 solidly, but once we do, I believe S&P 500 will rally like this too. We are in a bad spot, so we need to continue to monitor it, make sure we clearly stay above that 200 daily moving average. But as long as the Fed has got our backs on the stock market, I think we'll be ready for moves higher. So keep an eye on that, guys. Again, we'll be back tomorrow. Please like and subscribe. Leave a comment. Let me think what you think. Let me know what you think. And until then, I hope you guys have a great day. Thank you for watching.